The Hidden Constitution of Swiss Banking, 15 Rules the World Was Never Meant to Hear. 1. The myth of the marble lobby. What Switzerland really protects. Most people believe Swiss banks are for billionaires. They imagine marble lobbies, gold bars hidden in the Alps, and stern men with accents denying entry to the merely rich. But reality is subtler. I have seen accounts opened with 100,000 francs, and others rejected with 10 million. The difference is not money. It is fit. Footnote 1. Swiss banking is not class-based, it is compatibility-based. The client profile must align with the institution's internal compliance DNA. 2. Relationship over deposit, the first law of access. Officially, Swiss banks require high minimums, 500,000, sometimes 1 million francs. Unofficially, they open doors for long-term potential. One young entrepreneur brought 120,000 francs to Zurich. The banker saw ambition, not balance. A decade later, that client held 12 million. In Switzerland, relationships outlive deposits. Footnote 2. Longevity compounds more than interest, relationship capital outweighs liquid capital in client selection. 3. The banker's mirror, wealth understands wealth. Swiss private bankers are not clerks. They are peers, earning 6 and 7 figures, managing their own assets, often investing beside their clients. When you speak with one, you speak with someone who faces the same anxieties, market risk, property decisions, inheritance law. They speak your language because they live it. Footnote 3. Empathy in finance arises not from training but parity. Shared exposure to volatility creates authentic trust. 4. Fees, the silent predator of wealth. One client with 15 million paid $400,000 annually in hidden charges, 3.5% a year. After restructuring across 3 institutions, his costs fell to 1%. He saved a Ferrari per year in fees. Swiss banking rewards those who audit the invisible. Footnote 4. Compounding is neutral, it multiplies both wealth and waste. Fee ignorance is the costliest form of loyalty. 5. Secrecy evolved. Privacy without shadows. Numbered accounts of the 1970s are gone. International treaties shattered anonymity. But privacy, the professional silence of the banker, remains law. Disclosing client data without consent is a criminal offense, punishable by prison. Swiss secrecy didn't die, it matured. Footnote 5. True confidentiality survives not in concealment but in codified discretion, legal secrecy, not illicit silence. 6. Everything is negotiable, the market of one in your home country, fees are fixed and non-negotiable. In Switzerland, every client is a case study. Flat fees, custody rates, advisory structures, all adjustable. One Latin American family entered with 5 million, official fees were 1.5%. After negotiation, 0.7%. Footnote 6. Swiss pricing reflects the ancient guild tradition, no printed price for craftsmanship. 7. Security without investment, the fortress account. Not every Swiss account seeks growth. Some exist solely for preservation. For a retired athlete who feared risk, we built a portfolio of cash, gold, and sovereign bonds. He slept peacefully while markets screamed. Footnote 7. In wealth management, performance is optional, security is fundamental. 8. When Switzerland says no, choosing the wrong bank. One client, David, spent 10 months being rejected. 2 banks, endless compliance letters, wasted life. Within 30 minutes, I knew both were mismatched. In Swiss banking, the wrong door is worse than no door. Footnote 8. Institutional fit precedes deposit size, insider knowledge saves time more than capital. 9. Transparency by mandate, simplicity is a legal shield. Swiss accounts operate under a mandate, A document that defines every permission and limit in plain language. Number 100-page fine print, no legal fog. Your mandate is your constitution. Footnote 9. Simplicity deters litigation. Clarity is the most underrated form of protection. 10. Lombard loans, liquidity without selling deposit assets. Receive 70 to 95% liquidity. Pay minimal interest. No tax event, no sale, no disruption. A client with 20 million in securities borrowed 3 million, built property, and kept his portfolio compounding. To outsiders, he appeared liquid. In truth, his wealth never moved. Footnote 10. Lombard lending transforms collateral into shadow liquidity, capital that moves without leaving. 11. Gold in the mountain, the sleeping asset that works. Swiss vaults are real. Behind those steel doors, gold is not a relic, it is collateral. Bars become borrowing power. Metal becomes movement. An Italian industrialist transferred 30 kilos from his home safe to Zurich. He gained both peace and leverage. Footnote 11. Gold in custody is dual-natured, psychological comfort and financial instrument. 12. Legal separation, protection from collapse when a Swiss bank fails. Custody assets remain untouched. By law, securities and gold are segregated from the bank's liabilities. Only cash deposits are insured up to 100,000 francs, but investments are legally immune. Footnote 12. Asset segregation is the cornerstone of systemic trust. Switzerland codified moral hazard out of existence. 13. Americans and FATCA, doors that still open contrary to myth. Americans can open Swiss accounts. But the doors are few, the scrutiny immense. Minimums start at 2 to 5 million, compliance is exhaustive, and quotas apply. Yet those who qualify rediscover privacy within legality, diversification beyond Washington's reach. Footnote 13. Post-FATCA, secrecy was replaced by selectivity, scarcity became the new exclusivity. 14. Reputation and source, the real due diligence before forms or signatures. There is Google. Your public image is the first compliance filter. Then comes the source of wealth. Every franc must be documented. No records, no account. Lottery winnings? Acceptable. Untraceable cash? Rejected. Footnote 14. Reputation is the new collateral, data footprints replace bank references. 15. The philosophy of Swiss banking, discipline over desire. After 35 years, I can say this: Switzerland is not for thrill seekers. It is for those who think in generations. For families who view wealth not as privilege but stewardship. The Swiss banker's creed is simple: wealth is not owned, it is managed on behalf of time. Those who understand this rule sleep peacefully through every crisis. Those who don't, learn the hard way that fortune is fragile. Footnote 15. The essence of Swiss banking is not secrecy, but continuity, the art of surviving every storm without moving.